Let's talk about bonus depreciation as well as some of the other significant depreciation changes that have happened. So talk us through what's happening here.
Absolutely. Bonus depreciation is back, and effectively it's permanent now, which is really exciting. And the 100% bonus provision in the bill is unique and looks at two critical dates here to determine whether you're going to be eligible for this 100% depreciation opportunity. Property has to be acquired and placed in service after 1/19/2025. So we need to see both of those met. Now, the place in service piece, probably a little more straightforward. We see that all the time when we're talking about fixed assets and when depreciation start. The acquisition piece is a little unique, and you definitely need to do analysis around that to determine, all right, when was property acquired? You might need to look at a construction contract. When did you engage with a GC? Were there change orders? If it's a purchase, maybe you're looking at purchase documents. So taxpayers really need to think hard about what is that acquisition date? Is it falling after that critical point in time, 1/19/2025? If it doesn't, and it's prior, actually under the old depreciation rules, which for 2025 under the TCJA phase down of bonus, you're at, I think it's 40% if I'm not mistaken for 2025. So if you don't fall under this new provision, you kind of default to the old rules, if you will, which are you still have bonus depreciation, but it's just not 100%, it's 40% for 2025. The other new area, and this was a bit of a surprise, this opportunity around qualified production property. So this is essentially allowing 100% expensing for qualified production property that is real property. So this is, think of structural components, think of the building, a lot of the stuff that's going to be 39-year property, for example, is now eligible potentially for this new category QPP. So it's pretty exciting. This is really meant for manufacturers. So we've got manufacturing being called out here, production or the refining of tangible personal property. They're really trying to incentivize investments in manufacturing type facilities, right? Interestingly, though, right now production is being limited to agricultural and chemical production. So those were kind of called out specifically. This is an area where we definitely will get some guidance further outlining what constitutes manufacturing, what is the substantial transformation of property such that the facility would be considered QPP. So this one, from an effective date standpoint, construction has to begin after 1/19/2025, but before January 1, 2029. Also, it has to be placed in service before January 1, 2031. So it's it's got a limited life, but it's still a pretty healthy runway we have here. And the way this will work really is items that don't qualify for QPP here, these 39-year type assets, probably going to qualify for bonus depreciation if you meet those timing rules from an acquisition and place and service date perspective. So these are really nice complement or companion provisions to explore. If you've got a manufacturing facility that you are building out, definitely want to look at QPP, and then also the bonus 100% bonus depreciation provisions might benefit you as well. And then the last piece here, I'll be brief, Section 179 expensing. We had the limit increase to 2.5 million, which was up from 1 million inflation adjusted, which I think was about 1.2 if I'm not mistaken. And this one is for tax years beginning after 12/31/2024. So it's good to see we've got an increase in the 179 limit going into effect here as well.
Yeah, so with all that, I think it's a really good opportunity to just discuss how can this really empower and impact really looking at your asset expenditures and reconsidering, does a cost segregation study make sense here as a planning opportunity this year?
Absolutely. And of course, I'm going to say yes, right? We love cost segregation, but I'd say more so than ever, cost segregation is critical to identify these types of properties that are going to qualify for QPP, bonus. Cost segregation is really at the heart of how you're going to do this. And keep in mind, take something like QPP. It's not the entire building, right? It's just certain areas, things like administrative offices. You're not going to be eligible for QPP treatment. So it's crucial that you are really dissecting the building to determine what you can carve out for QPP, what you can carve out for 100% bonus depreciation. So when we do cost segregation, you kind of take an engineering-based approach and price out, piece out the entire building. Definitely something that you want to explore with any sort of real property investments now in light of these new, very exciting depreciation rules.